Welcome back, traders and investors. We have Tim Melvin here of the Deep Value Investment Ladder, and he found some value in the Kentucky Derby. Tim, how did you do?
Well, last year I was very disappointed because I did not cash a single ticket on Derby Day, and that broke a 5 year streak
Ooh.
of continually cashing tickets. But this year we got back on the board.
So you went with the chalk then, huh? You went with California Chrome. I sure hope you had
Now,
that. Did you go?
no,
What
no,
you?
I had California Chrome and a couple of exactas, but I
Ah,
won my money on Commanding Curve.
did you have command? Do you had that $354 exacta?
No, no, I did not. I did not. But I did
Okay.
have the horse with a large percentage bet to show.
Oh,
The horse went
really?
off at 30 to 1.
Okay.
So I ended up making for the day about 20% on all my bets just from that show bet.
Okay.
You know,
Wow.
there was no
Yeah.
doubt Commanding Curve was going to win the race, guys.
You
I
mean
mean, it's
California Chrome?
California Crown,
Yeah.
yes, was
Yeah.
going to win the race much faster than everybody else in the field, just a better horse. But you were getting 2 to 1. Now
I
you
know.
weren't getting paid to put the money up.
And there's
But
Tim Melvin looking for value.
All risk
Yeah,
return, even
risk.
in horse racing, it's all about risk return, right,
it,
Timmy?
it's it's all about risk return, and we had the bet spread in such a way that if any of the best horses won, I was going to have a really good day. But I walked away with a profit from a pretty smart bet I thought on Commanding Curve. Plus, being a baseball fan, how do you not bet on Commanding Curve?
I had my money on Sam Rat. He fouled Chrome out of there, but just didn't have the gas. I tell you, I haven't seen a horse whoop the field in a Kentucky Derby like that in a long time. And I don't know if you noticed, but the jockey only hit him like once or twice coming down the stretch, and then Espinoza actually looked behind him. He looked going
Yeah.
into the wire. That is a rare. So could have a Triple Crown winner. Well, you found some value in the Derby. Are there any values left out there in the stock market, Tim?
There's some, and I'm going to talk about some stocks today that look a lot like my Kentucky Derby bet. Okay, they're long shots coming out of the gate. If I'm wrong here, I'm going to lose a little. If I'm right, I'm going to make an enormous amount of money. Okay, so let's jump into where's the worst place in the world right now besides Russia or China to even think about putting money in, and it's been the worst for a couple years now.
Greece?
Greece, Greece, absolutely. Well, guess what? Last week, Eurobank, one of the big four banks in Greece, recapitalized. Okay, they did a huge stock offering, really kind of hammered any existing investors in the thing. The government walks away with a large stake in the bank in this deal, but look closely at who else recapitalized the bank. It's Wilbur Ross and Prem Watsa of Fairfax. Their last deal was Bank of Ireland in 2009. They're sitting on a profit of 5x their cash right now, and they still own about 40% of the bank. This deal looks exactly like that. And it also looks a lot like Spain, by the way, in 2012, where if you got your money into Spain just buying Santander, when their economy and banks were just such a mess in
What's
2012.
the symbol on that one there, just for our listeners
Oh,
there?
we're going deep here. It's ERFEY.
ERFEY.
Yeah. So, and I'm going to double check that while we're on here because I might have one of the digits wrong. But it's trading at around 30 cents. That's a little tiny bit of a premium to where Watsa and Ross got their money in. But they're not looking to make 10% here, guys. They're looking for 5 and 10 times their money. And when we look at Greece, it looks bad. I mean, unemployment's still 27%. Housing's still going down. But I'm sorry, it's EGFEY, guys.
EGFEY. I know we're looking here. EGFEY. Okay.
Yeah, and caveat, it trades thin. All right, so use limit orders. If you don't get it today, you'll probably get it tomorrow. All right, just be a careful, cautious buyer on these things. But Wilbur Ross, I've been investing in Wilbur Ross deals for the last 15 years. I have never lost money. I have vomited a few times from the volatility, but I have never, on balance, lost money. The guy is one of the best distressed asset players on the planet. If I can get my money in within 10, 20, even 30% of where he did, looking out 5 years, I'm pretty confident I'm looking at a situation that's going to be pretty volatile. There's going to be some interesting twists and turns, but I'm looking for 5 to 10 times my money back on this deal over a few years.
What else are you looking? Is there anything? Because these penny stocks here and these ADRs scare the
They're
hell
tough.
out of me.
They're
Yeah,
tough.
whenever I see ADR, I always kind of just step away from it as a trader. But you got anything else that's looking at value there too, there, Tim?
Well, yeah, we added this week, and this is a little more thin, not as thinly traded here. Global Ship Leasing, GSL.
Okay.
They disappointed the street. The stock's been whacked for about 24% in the last month, but they took some huge step forwards in the quarter. And Wall Street, with its typical fascination with the quarterly earnings, that was all they cared about, so they trimmed the stock. But they removed and refinanced a very restrictive credit package and replaced it with some structured notes. So they no longer have to take 100% of their cash flow and pay it towards debt reduction. They can now buy new ships. They can look to grow. They can pay a dividend. They've got a ton of cash flow that they can do things with now to build the actual value of the company. This thing's trading at about 50% of book value. So, below what I think the company can be liquidated for at this level. They've got a 99% fleet utilization on all 17 of their vessels. They just extended their largest contract out to 2019 at a higher rate that produces an additional $54 million of cash flow per year. So I see a lot to like in there. I'm very thankful everybody was focused on short-term earnings. That's another stock. I think you're probably looking 3, 4, 5 times your money as the economy improves over the next 5 years.
This chart is interesting here too. You've had this $4 area, gave you a little bit of trouble, but then we just had a tight little day on Friday, closed and held over 4. If we could start getting over 405, 406, we could start breaking out here too. I don't mind this chart. Out of all the ugly charts that we've been looking at on the show here today, this one actually does look pretty decent there, Tim.
Yeah, I'm bullish on the shipping business, have been for quite a while. The dynamics of the shipping business are slowly but surely changing. It's kind of been the wild, wild west of industry for years. Lots of single family ship owners and guys really shooting from the hip and taking on too much leverage. But at the end of 2011, 2012, all of a sudden people like Ross showed up. Ross has a huge position in shipping, dry bulk and tankers both. KKR started coming in and they're buying ships and ship loans and they're looking to buy shipping companies. Same with Apollo Global. The private equity money started just kind of tiptoeing into this thing. And everywhere you look, these things are trading 30, 40% of tangible book value. We've got some that are doubles already in, about a year, or ISH, which is my favorite U.S. ship. ISH, International Ship Holding. They have global carriers. They have Jones Act fleet, which means they can ship from port to port within the United States, which I think is pretty valuable. We bought it in the high teens a year ago. It's still cheap here at 26. It's trading at a huge discount to book value and pays a very nice 3% plus dividend. So I'm really bullish on shipping. Global Ship Leasing, I think, has a nice fleet. Their contracts are solid. Now that this very restrictive financial package is gone, I think management's got some choices that they can make to get the stock price a lot higher over time. We've owned it for a while. We're down in it, but we bought more because I think right now, in a rational liquidation, you could liquidate this company at a profit.
And so these things, they're on your radar, and then when you hear some of the bigger investors in it, it just kind of piques your interest a little bit more. Or do you get your keys from the Wilbur Ross and then you start doing your homework?
Yeah, I follow the private equity guys. I would hire private detectives to follow these guys around if I had the money. Because when you see them starting to show up in an industry that's been out of favor, you're within a few months of a bottom. These guys don't come out to buy a falling knife. They're buying the knives that are lying scattered all over the ground with the intent of holding them. I think the average holding period for a private equity deal right now is about 5.5 years. And that's really consistent with my time frame. So if I see all these guys all of a sudden in shipping as they were last year, and right now they're all in energy, then I'm waking up and going, I got to look for values there because the really smart, patient money is out and hunting, and I got to get in alongside them.
Tim, what about the big one, dry ships there? This is one that's been in the doghouse here for the better part of, I don't know, I'm going back to the monthlies, better part of 5 years, really. It started to show a little bit of life there about 4 or 5 months. This is at the end of 2013, and then it's just back in the doghouse here again. What do you think of this one?
I don't like their balance sheet and fundamental factors. They do not pass my credit tests at all.
Too much debt? Is that the problem there? Is that
too much debt? Not enough cash flow. Nothing's improving. Every category that you look at is getting a little better or a little worse. They're not moving forward.
Okay.
All right, been some bad news in the banking sector. Started kicking it off with Bank of America and now J.P. Morgan. Were you the one that I know we had someone talking about Regions Financial? Was that one of the issues you were following? Because they got some love and barons over the weekend.
We own Regions, but from 2009, so I doubt that I've mentioned it recently.
Okay.
Um, um,
It's
well,
long term.
we
That's a long term investment.
guys, we're just not a trader over here. We hold stuff
Yeah.
until it works, and until it trades at a premium valuation and is over our target price. So, the big banks are getting a lot of press, most of it bad, but then as the little banks' earnings have been coming in, and the last 2 weeks we had an awful lot of them. You're seeing just steady improvement. The credit picture's getting a lot better. Just has continued for several quarters in a row now. Loan demand's not increasing very much, but it's getting a little bit better across the board. Book values are growing, capital levels are growing. So all this bad stuff's happening up at the top, but these little banks are slowly but surely getting better, and we're going to see this consolidation trend continue and accelerate in the little banks. And somebody asked me the other day, they were like, it was one of the marketing people from Benzinga. They're like, all right, tell us why somebody would not take your Banking on Profits newsletter and invest in these little stocks. And I said, well, because they're foolish and don't like money. That's the only reason I can think of, because this, for your long-term money, is probably the single best thing you can do. It's going to be a very boring way to make an ungodly amount of money over the next 10 years, and they're still cheap.
Okay. All right, we had Doug Cass on last week, and I know that you popped in the chat room, and he laid out a bearish thesis for the market, and I just wanted to get your take on what he was saying, what he was following. You've been talking for a while about a hard time finding value, and you do your homework to find value. But what do you think? What do you think about his bearish thesis?
Well, I think he's got a pretty good shot of being right here. I mean, if you look at the big picture stuff that I like to talk about, the Schiller PE, the market cap to GDP, the value line median appreciation potential index, all of these things are saying, hey, the market's back near 2007 levels when you look at the big picture. That's a little scary. Now, Doug has a shorter time frame than I do, but most of the time, I think he's right. We're ripe for something to happen in this market and push it lower. We've been up for 5 years. We're better than double the market bottoms of 2009. So it makes sense that we're kind of due. The economy, as Sam Zell put it, does not reflect. The stock market rather does not reflect economic reality. We've got just an okay economy and a superheated stock market. So I would not be surprised if Doug is right.
So these positions that you have, even if the market goes into a total meltdown, I mean, we discussed this before, you have your stops and stuff, but you're basing this on value, and if you do get like a 400 or 500 point down day in the market, it really doesn't change your overall thesis. It's just if it hits your stop price, you're out.
Yeah, we don't use stops. I do not use stop orders at all. Everything's based on if the fundamental score of that company changes, I'll sell. Okay, but if it's just getting cheaper and the fundamentals are staying the same,
you might even buy more.
I'll probably most certainly buy more. So yeah, I don't use price stops in a long-term approach like mine. You've just got to ride it out. Stops are going to destroy your returns.
You're a pure fundamental balance sheet, analyze the financials type of investor, right, Tim?
Yeah, I'm just not smart enough to do this advanced statistical and charting stuff. But balance sheets, I've got those pretty good. So I just stick with those and ride that, and the market does what it does.
I mean, a lot of people made a lot of money just playing, and for over the course of the stock market. That's how it's been done for hundreds of years. And really, when you break it down, the financials is really what moves and what's going to drive prices in the long term. So even though you can say high frequency trade and all this short term stuff moves prices around, in the long term, the company's price should still reflect overall valuations. And if you're analyzing from that perspective, you're kind of cutting out the noise, right?
Yeah, it's like Ben Graham said, in the short run, the market is very much a popularity contest. In the long run, it's a weighing machine. And eventually the value should be reflected. I've been doing this for longer than I want to admit, because I pretend not to be that old. But it's always worked. And you've just got to adapt that longer cycle. I mean, even if you're a trader, when I was a broker, I had a whole bunch of clients that were CBOE and CBOT guys. They traded day to day and millisecond frameworks, but they gave me their money to manage for the longer term. So even if you're making a ton of money trading, you should have long-term money in the stock market.
Okay,
And I try to do the same thing there, Tim. And it's hard as a trader because I'm a guy who trades a ridiculous amount of stock, and I have been for years. But I have a separate account where I try not to look at it. I mean, I don't even log into it sometimes for weeks because I know if I log into it, the trader in me will want to trade out of some of these positions that I'm in. So I try not to look at any of that stuff. And it's a hard thing to separate trading and investing, but it is two completely different animals.
Absolutely. And here's how to solve that problem, by the way, Dennis.
Okay.
Use my small banks, okay? Because you can't trade those things.
They're too illiquid. There's no bids and offers.
And it's going to take you a day or two to buy a position, day or two to sell a position. There's no trading that stuff around. But
That's a good point. Okay, we've had Tim Melvin on the Deep Value Letter. Tim has spent decades identifying undervalued stocks in the market and is having to work overtime here to find some value, but he does that for us today on Benzinga's Pre-Market Prep Show. Tim, thanks a lot, and I'll be to Preakness is going to be a tough race, huh? Because Chrome's going to go off the favorite. Probably is not going to be a big a field, so they're not going to get a juicy exactas. But we'll check in with you and see what you got on the radar for that. Thanks for being on today, and we'll talk to you soon.
guys, it's always a pleasure. Let's talk soon.
Okay.
Thanks, Tim.